how can I make sure that it's recorded? Okay. Good afternoon, everyone. Thank you for joining us for the DIC's information session for the full year ended December 2023. If you would allow us, I will run through a very brief presentation on the financial performance of the company, following which we will leave the floor open for any questions or queries that might come up. Just to start, a quick overview of the company. DIC is an Omani investment holding company. It's obviously publicly listed, established in December 1987. We currently stand as one of the largest listed investment companies in Oman with an investment book of 207 million riyals. We have investments in a variety of sectors, most notably of which is banking, financial services, and insurance. We also have significant exposure to manufacturing, utility, and hospitality businesses, in addition to some investments in medical supplies, amongst others. Our major investments is Bank Dhofar. We are a promoter and the largest shareholder in one of the largest commercial banks in Oman. Dhofar Insurance, where we are also a promoter and the largest shareholder and the second largest insurer in Oman. We are the largest shareholder in OIFC, which is a leading company in billing services, collections, and debt factoring in the Sultanate. And we are also one of the largest shareholders in Dhofar Food and Investment, which is a diversified FMCG company based out of Salalah. Our major shareholders include prominent business groups and families in Oman. Those include Muscat Overseas Group, Melatan Trading and Contracting, as well as FinCorp Investments, in addition to some government pension funds, the Social Protection Fund, and the OIA. Many of these shareholders we mentioned are promoter shareholders of the company. Just a brief of our board and management. Obviously, this is the board that was in place up to December of 2023. We have recently had a new election where our board was expanded to a 9-member board. And we have 4 new faces on that board. So hopefully in the next update, we will provide everyone with an update of who the new directors are. But as of the end of the year, our board was made up of, chaired by Sheikh Khalid Al-Mashani. Deputy chairman was Mr. Tariq Al-Ajeli. And we had Mr. Rashad Al-Battashi, Mr. Umar Al-Sheikh, Mr. Salam Al-Awadi, Mr. Faisal Youssef, and Sheikh Saud Al-Mashani as well on the board. All of whom obviously contributed very positively to the DIC's actions. And we wish Mr. Rashad and Mr. Faisal the best of luck as they have recently departed the board. All other members from the previous board are continuing with us. With respect to the senior management, I'm presenting Ramz Al-Amoudi. I'm the Chief Executive Officer. On my right is Vishal Makwana, our Chief Financial Officer. And on my left is Jamal Kamel, our Company Secretary and Compliance Officer. A very brief rundown of our philosophy for investments and the process in which we carry them out. So the objective of our investments is we generally wish to invest in equity instruments issued by new and existing companies. We generally pre-approve sectors and geographies and have that regularly revisited with our NRC. But as it stands, most of our investments are in the Sultanate of Oman. While the company does have a strategy to diversify investments moving forward, we will do that tactically and as liquidity allows us to do so. And obviously, we get pre-approved asset allocations. So, I mean, the management team will set the investment strategy and the investment objectives. Those will be pre-agreed with the board. And throughout the year, we would carry out our investments according to that. Obviously, that process starts with management, goes through NRC, following which it goes up to the board for final approval. Any amendments to that have to go through a similar process. We manage our risk by carrying out a scenario analysis framework. And we have set specific risk tolerance levels by asset class. And we monitor those closely. Whenever a maximum is reached, decision is taken on whether to exit or diversify or to transfer the risks through whatever arrangement is possible at that point of time. Just a highlight of our investment portfolio. So we have three subsidiaries: Dhofar Investment and Real Estate Services, Garden Hotel, and Dhofar International Energy Services. The total value of those subsidiaries amounts to 1.1 million riyal. As many of you might be aware, many of these subsidiaries are not operational. They are used to house specific investments in specific sectors. And when the time comes and those investments are exited, the subsidiary becomes more of a shelf company. Our biggest component of our investment portfolio is our associates. Those include, as I had said before, Bank Dhofar, Dhofar Insurance, Financial Services, OIFC, Salala Medical Supplies, and DFI, Dhofar Food and Investment. And the total value of the associates in our books stands at 176 million riyal, with the market value of the same companies coming close to 140 million riyal. We also maintain a portfolio of investments in equities, mostly in Oman. That portfolio is valued at about 24 million riyal as of December. The main components of that portfolio include shares in Bank Muscat, Salala Port Services, Dhofar Tourism. We also have some unlisted investments within that, such as Dhofar University and others, that fall within the 24 million portfolio value. We also maintain some fixed income investments. These include investments in bonds and fixed deposits, and may include short-term loans to some of our subsidiaries. The values of those investments on our books as of December stands at 5.7 million riyal. So the total investment book comes to close to 207 million riyal as of 31st of December of 2023. This highlight of our key investments. Let's start with Bank Dhofar, which used to be the second largest bank in the Sultanate. I think it's down to 3 following the merger of Bank Sohara and HSBC. The value of that investment in our books is close to 140 million riyal. We own 24.09% of the bank. Second key investment, we can talk about Dhofar Insurance. Our ownership stake in that is about 38.14%, carried at a value of 15 million riyal. Dhofar Insurance is the second largest insurer in Oman by reported GWP. I think if we talk about local GWP, it would come out as number one, as the number one position in Oman includes a GWP sourced from other markets, most notably Kuwait and the UAE. We are also happy that, we will get to their performance in a few minutes. Third most notable investment is OIFC. We are a 38% owner in OIFC, with the value of that investment being 11 million riyal in our books. As you're aware, we had started the process of merging with OIFC back in 2023. That was put on hold as a result of certain legal action. At the end of this presentation, we'll give just a very brief update on the status of that process. And the final key investment we can look at is Dhofar Food and Investments. As you're aware, we obtained the stake in Dhofar Food and Investment through a share swap arrangement, where we gave our shares in Omani Gulf Food Company to DFI in return for shares in DFI itself. That resulted in us acquiring a stake of 26.75% in DFI, becoming the second largest shareholder in that company. We are very happy to have closed that deal. As a result of their full acquisition of OGF, DFI has become a diversified FMCG company producing dairy products, beverages, cattle feed, poultry, and edible oils. Is putting it in a great position to expand both locally and regionally. And we are very actively involved with the management of that team, of that company, to achieve the growth ambitions that we have for it. If we take a very brief look at the financials of the group for the year ended December 2023, as we can see, the total income of the group has gone down from 6.2 million down to slightly less than 500,000. The noteworthy aspect here is is to note that the major cause of the reduction is on the unrealized losses on the investment portfolio, whereas last year we had gains of 4 million unrealized gains. This year we have unrealized losses of 2.1 million, which almost entirely explains the fall in total income for the company. Total expenses and depreciation have increased from 2.286 million to 2.65 million. The bulk of that increase came as a result of the fees that we had to incur for the merger process, for the acquisition of DFI, and obviously the standard annual increases in employee entitlements and salaries and whatnot. Profit before tax, we can see that that has fallen from 9.8 down to 7.8. Once again, the decline mainly comes as a result of the unrealized losses on the investment portfolio. Important to note that within the 2023 profit of 7.8 lies a bargain gain of close to 3.2 million, which is the result of the PPA exercise that was undertaken on the acquisition of the 26% stake in DFI. It's also important to note that the share of profits from associates has shown an improvement of about 1.7 million from last year, which is a very positive indicator. As you have seen, our major components of our portfolio is the associates, and we strive to see a significant improvement in their performance as time progresses. If we were to take a quick look at the balance sheet, the total assets of the group have increased from 218.8 million to 223.8 million, mostly as a result of the increase of the value of associates. We have also witnessed a growth in equity from 127.8 million to 133 million as a result of the profits that were booked during the year. Liabilities have increased from 218.8 million to 223.8 million. However, within
it's total equity.
Exactly. That's the total. Sorry. On the loans and borrowings, I'd like to highlight the reduction in the loans and borrowings from 90 to 89. But that's the consolidated loans and borrowings right here. So just a graphic view of the performance indicators we just looked at. One thing that I would like to highlight is the performance of the associates once again, where we see that almost without exception, all of the associates' performance has almost improved with respect to the listed ones. When we look at the unquoted ones, we find a slight drop-off in certain of them. I'd like to highlight the OGF, obviously, for the year 2023. This does not include the full year. It only includes the part of the year, whereas in 2022, it was the full year. It's fine. Once again, a graphic representation of the balance sheet. Nothing new here. This is exactly what was discussed in the table we viewed earlier. And a brief overview of the performance of some major associates. So if we look at, we've included information on the performance on Bank Dhofar, where some of the key highlights we'd like to mention are the significant increase in net fees and commissions and the significant improvement in net profit after tax, which results obviously in an increase in equity. These are all positive trends that we have seen with the bank over the past few years, and we look forward to further improvement in that performance. We've also included in the presentation a view of the performance of Dhofar Insurance, for example. Here, we'd like to highlight that the GWP has exceeded 70 million for the first time. This, I think, is a very important threshold that the company has reached. We've also witnessed significant improvement in investment income, and as a result, a very healthy increase in profit after tax of close to 60%. OIFC remains as stable as ever. We don't see any significant changes in revenue or in EBITDA, but obviously they have the growth in Bank Suhar as a result of the merger. HSBC has contributed significantly to their bottom line, as a result of them booking those significant profits from their major associate, Bank Sahar. If we just take a look at the group at BIDC level, shareholders' equity has increased by 148% between 2019 and 2023, increasing from 53.4 million to 132.5 million. Whereas our long-term borrowings have declined by 30% over the same period, going down from close to 115 million down to 81 million in senior debt outstanding as it stands. As a result, our debt to equity ratio has improved to just less than 1, so 0.61 to 1 in 2023, whereas it was in excess of 2 to 1 in 2019. We are, as it stands, very comfortable with respect to all of our loan covenants. We are not in breach of any. And we are happy to report that for the first time in a number of years, the company has recently announced, our board has recently approved, recommended a distribution of a cash dividend of 2.5 basis per share, which was approved by our shareholders in last week's AGM. So we are very happy for this turn of events, and we could hope to improve that in the years going forward. I'd also like to give you an update on the status of our merger with OIFC. As I had said, the merger was stopped as a result of a court action that was taken by some minority shareholders in OIFC. On the 19th of March, a verdict was issued by the Court of First Instance rejecting the case filed by the minority shareholders of OIFC, meaning that the merger is effectively back on. What we are doing right now is, through our lawyer and legal representatives, we are communicating with the CMA to request that any blocks that were put in place on the implementation of the merger are removed, and then we would be proceeding with the merger. We would certainly announce in the market any significant events that happen over the next few weeks as this situation continues to unfold. Thank you for being so patient. We are available for any questions you might have right now. Thank you very much. Stop share. Yes, Vision Capital, I see your hand is up.
Hello.
Yes, hello.
Hi, good afternoon. This is Bishan Bhala from Vision Capital. Thank you
Hello.
for the call and the presentation. Very informative, very well explained. Just a few queries, as a follow-up to the last call we did. Firstly, congratulations on sort of the verdict that came in your favor. So at least that process can get started. In terms of time frame, what time frame do you envisage for this transaction to conclude with the OIFC?
We honestly don't know, to be honest with you. I mean, it's very fresh. We're very frankly, this whole thing has been a new thing for the market in Oman. So what we're doing right now is we have communicated with the CMA, and we are waiting for feedback from them. As you know, the issue was stopped at the CMA level. And so we need we need the CMA to continue with the implementation. So the minute we find out, we will certainly make the appropriate announcement, but we're hoping that it will not be too long, and we're hoping that we can close everything this year itself.
Right. So in terms of just to confirm, in terms of any further regulatory approvals or any sort of, let's say, legal sort of hindrances, that's out of the way.
Well, not really. I mean,
there is no further.
I mean, I'm not a lawyer, and honestly, I did not see the need to bring a lawyer to this meeting. But the way I understand it is from the date of 19th of March, when the verdict was issued, the shareholders who had originally filed the case still have 30 days to file an appeal. So there's still a window for them to appeal the verdict. Now, obviously, it will be up to the appellate court judge whether he accepts the appeal or not, and whether the appeal moves ahead or not. So there's that legal aspect of it as well. From our side, we don't feel, other than our communication with the CMA, that anything else is required. Obviously, there is an implied requirement from the CBO for their approval for the merged entity to own more than 10% in two separate banks. The request for that was issued months ago to the CBO, and we are updating them based on their request with the progress of the case. But as I said, there's a lot of moving parts here, so we'll certainly let the market know whenever we hear back, be it from the CMA or whether if the other party decides to appeal the verdict, we'll certainly let everybody know.
Okay, sure. Because I wanted to touch on that topic. I'll come to that later. Right. Now, if you could just talk about this loan that is sort of from this OAB-led consortium. I can see that in your notes. It's been drawn down in June 2023. It amounts to 82 million riyals. There's a fixed rate of 6.25% per annum. Now, a couple of things. It mentions the interest rate is subject to review on a quarterly basis. Now, in terms of where the interest rate cycle was when you booked the loan, has that number increased, and what is it subject to in terms of on a quarterly basis?
As of now, it's still. I mean, it's based on a certain benchmark formula linked to average fixed deposit rates in Oman. But as of the last report we have, the interest rate has yet to be reset. It hasn't changed.
Which would also then imply that since you booked this last year, there would not be any downside sort of positive news if interest rates were to go down, because interest rates started climbing up last year, and we expect them to sort of cool down this year. So you expect this sort of interest rate to remain constant during the term of the loan. Is that a correct assumption?
Well, not the term of the loan. For the term for this year, let's say the loan is long-term loan, right? So it's in excess of 10 years. So God knows what will happen over 10 years, but we don't expect any shocks, so to speak. Yeah.
Noted. Now the loan is repayable on a yearly basis with last payment in June 2034. And if I look at your loan schedule or at least a maturity profile, which is classified into 1 year, 1 to 2 years, and above 2 years, this year you have a repayment of 9.1 million, right? Next year it's 5.2. So this loan is not equally payable over the
it's
over
not.
the
No,
next,
no, it's not. I mean, the way loans. Yeah, I mean, even the 9 million is not exact. There's certain optional components within that, just so to speak. So there's, within the loan repayment, there's a specific amount, this mandatory repayment that has to be repaid, or structured repayment, so to speak. And there is another portion of the payment there's a cumulative amount that has to be paid over a 5-year period. But how you pay it, there's a certain level of flexibility in how you make those payments.
Okay, and I'll just explain the reason I mentioned that is, hopefully, if everything goes well with this OIFC transaction, what we're effectively looking at is, prima facie, at least on the dividend numbers announced by the respective banks this year itself, the company Didex stands to make approximately 9.5 million riyals of annual cash flow, which is based on, let's say, 7.75 Baisa from Bank Dhofar and a 5.5 Baisa dividend from Sohar, which probably might only go up given that they have now a combined entity. That 9.5 million riyal cash flow gives us enough comfort to know that you have two components. You have a sort of finance cost and a repayment. Now, cumulatively, what cash flows do you have on an annual basis? If you could just elaborate on that.
As Didex standalone, you mean?
Yeah. Yes.
Okay, I mean, because we're yet to start factoring in the effects of the merger and those cash flows, and we'll release those numbers as things progress. But as Didex stands, listen, I mean, obviously we're a holding company, right? So our investments go to the capital we raise goes to generate yield on investment, but also generate capital gains. And the way we pay down our debt is a mix from the dividends we receive and also from exits that we do over the year. So in terms of meeting Didex commitments for the current year, 2024, we have taken a close look at what the cash flows would look like, and we feel we will need to make asset sales of about, was it 3 million? 4 million? 4 million. 4 million. Asset sales of about 4 million to generate what is required to pay both interest and the debt repayment that we've committed to.
Got it. No, that's what I was trying to sort of understand. What would be the shortfall in case? So okay.
No, there will be. I mean, I'll be honest with you. It's I mean, in the past we had enjoyed a significant level of dividend payments to shareholders that were somehow financed through a mix of accruals and debt. Now we're moving in the opposite direction where we need to deleverage. To reach, I mean, we've done a very good job deleveraging over the past few years, but we still have ambitions to deleverage even further. to remove any kind of further pressure in terms of assets. But to do that, we do have a program in place to sell certain non-strategic assets year on year to bring the level down, the debt level down to a level where we feel it is sustainable.
Right. And sort of when we spoke on the last call, you had mentioned that it would be a bit challenging to sort of make some divestments this year. Now I see in your P&L, investments to P&L, you have bank muscle that's fairly liquid, but I would imagine you would probably want to hold on to that. So for some of the other investments that you hold, they would probably be a bit more illiquid in nature. So
and that's why we plan.
How confident are you of being able to raise?
Listen, and in terms of
Please
raising
go
4
ahead.
million, we're very confident. We're very confident simply because we don't rely on only one single asset class to generate the sales. So there are certain assets that are non-strategic, but they are very sticky, illiquid. And for those, we put in plans and work well in advance on selling them. So for things that we're planning on selling in November, December, we've already started talking to people and started planning for that. But wherever we have a plan A that fails, we always have a plan B. So yes, you rightly said, some of the main assets we'd like to sell, sometimes, there might be delayed. And so we'd have to fall back on plan B, which is selling maybe a more liquid asset, but making sure that you sell it at the right time for the right benefit, right?
Sure, no, makes perfect sense. I just wanted to, and it's not a big amount given your balance sheet size. So that gives us enough comfort that the amount will be met. And let's say, and this is on the current sort of balance sheet that Dick has, not factoring in the merger.
Exactly,
right?
Yes, exactly.
So if you, so now, sure, I completely understand. Now, when you factor in the merger, how does, let's say, FY25 look in terms of, so let's say if you have the same obligations from FY24, and now you have the cash flows, how does FY25 look for the combined entity? Because Sohar also has its own, OFC will have its own debt obligations, right? So, so have you done some analysis around that? Because I would imagine that would be the next step.
We have done that analysis. We are reviewing that analysis, but honestly, I don't think we're not in a position to disclose the details of that just yet, because that is part of the, let's call it the value addition roadmap for the merger itself. So we'd like to come back with news to the market once we've, in a sense, booked those gains, so to speak, because there are gains to be made through restructuring that, as everybody knows. And we think that with the combined company size, there's a significant benefit to be brought to shareholders by repackaging the entire debt side of our balance sheet while we work on the asset side as well.
Fair enough, because we were on the OFC call and we see sort of potential there for improved cash flow. At least that's what the company's sort of spoken about. So that also sounds interesting. You mentioned about the CBO approval being under review for DIDIC, because now you would have more than 10% in two banks. Sort of how do you see that panning out? What time frame do you see for that process?
Well, we don't see. I mean, based on our initial request for approval from the CBO, by the time they answered back, the case had been filed, and as you know, I mean, the case was filed very close to the dates of the EGMs that took place last June. So the CBO basically wrote back and said, just keep us posted with what's happening in the case. Now, my gut feeling is, and obviously I don't speak on behalf of the CBO, but my gut feeling is if the CBO were to reject it, they would have rejected rather than asked to be updated, right? If it was, something that they're completely against. So the fact that they were following up on the progress of the case tells me that they've left a window open for approval to come. Add to that we know that there are other precedents in the market where there are companies that do own significant stakes in more than one bank. So I don't believe that the CBO approval will be impossible to get. Inshallah, we should get that very soon.
And I mean, I'm aware of significant stakes, but not probably more than 10% in two banks. Now, if it were to come to that, where you allowed a significant stake below 10%, could there be a possibility of sort of trimming down the bank Sohar exposure at OFC level? Because I would imagine you want to hold on to your Dhofar exposure, because that's far in excess of 10%. I mean, I understand it's, and probably you're probably not the guy, but is that something you would consider?
That's an excellent question, and I'll be honest. I mean, I'd like to cross that bridge when I get to it. But yes, One thing that the CBO could come back and say, listen, you can own these two banks, but then you have to go down to below 10% in one of them over a certain period of time. And so we will plan for that accordingly with the CBO. But we are open and flexible to any kind of suggestion that might come through. But to tell you right now which bank I would hold on to, it's difficult to say.
I mean, given that one is at 14% or let's say 12%, one's at 24%, I would probably do my math over there. But the reason I asked you is because at least as a strategy, it's something you're open to. It's not like you'd say, you know what, this doesn't make sense, so we won't do the entire transaction. Because I would imagine
Well, we're not going to pick fights with
stake.
regulators, guys, right? I mean, the regulator is the regulator. If the CBO says this is how things have to be, you respect that, and you work under.
Sure.
We work under the aegis of these entities, right? We're not here to set precedents by forcing things on them. But we do hope that they see the benefit of what we're trying to do to the market at large. We're not, at the end of the day, bigger companies would provide better benefits for a lot of people, right? So we're hoping that they see the overall benefit there.
Sure. I don't see anyone else in the queue, so if it's okay, I can ask you a couple of more questions. Is that fine?
Yeah, sure, go ahead.
Sure. Yeah. Now you've spoken about sort of a planned divestment of almost 60 million riyals, or that's the amount over the next, let's say, 2-3 years. Is that entire amount going to be used for deleveraging, or would you sort of look at other investments? And if yes, what sectors would you target as a strategy going forward? Because I would imagine you would already be heavily concentrated in the financial sector. So any sort of thoughts over there?
Thank you. Excellent. I mean, it's clear that 60 million came from, I think, 2 presentations ago. So congratulations on keeping track of that.
Yes.
But that's still the plan. You're right. No, it will not all go to deleveraging. No, I mean, at the end of the day, we are looking to this. Obviously, this is all post-merger we're talking, right? We are doing this to generate growth, both organic and inorganic. You cannot sell everything and pay down the lenders. At the end of the day, we're a holding company. We're supposed to have a certain level of debt on our books. So no, the 60 will certainly not all go to deleveraging. No.
Okay, and probably later, subsequent calls would be a better time to sort of look at what strategy you have in.
Yes.
So, irrespective of the divestment, in general. Yeah, please go ahead.
No, sorry. Go ahead.
So the reason, I mean, the point of the question was not to get to an amount that you can divest over the next couple of years, but more as a strategy of what sectors you would probably look at. I'm sure even though the amount isn't raised right now, you already have some sectors that as a holding company you keep targeting. And I'm just trying to understand whether financial services is still one of those sectors, or you'd probably look at other sectors. That's what I'm trying to understand over here.
Well, I think we will always like to stay in waters that we understand, so to speak. So, we're not going to move into nuclear power or something crazy like that. We're going to stay close to the financial sector, but working on interesting things within that sector. So, I won't be shy to say that I'm very bullish on insurance. So I would be looking at growing our insurance footprint in the region. We're also quite keen on new developments in the financial sector. So fintech is a good idea. So we will stay close to the sector. We'll stay within those waters, but we will be looking at doing more interesting things in them.
No, that's a good point. I mean, and there's nothing wrong. In fact, that's the idea of sort of using your expertise. So it was just to understand whether you'll still stick to something that you're comfortable with, or look at diversifying. And there's nothing wrong within that. All right. Yeah, that's it from my side. Look forward to interacting with you when we have more updates on the OFC transaction, and wish you all the best. Thank you so much.
Inshallah, I mean, to you and everyone, we're quite keen on moving ahead with the OFC merger. We look forward to coming back to the market with very detailed plans or very detailed information on our future plans. But at the end of the day, everything is time bound, and we'd like to make that announcement, make those presentations to the relevant people at the right time. So hopefully not too long from now, we will come back and present those to everybody involved. Yeah.
Excellent. And just one sort of, could you just explain sort of what strategy you have for Dhofar Foods investment? It looks pretty interesting, but if you could just highlight what strategy you have over there. We saw some sort of some consolidation over there. Can you just highlight that?
Yeah, I mean, we're not doing anything crazy or too sexy with that, to be very honest with you. But there are some low-hanging fruits. So as you know, DFI is a collection of companies, and within DFI itself, there's various products. Now, right now, what we're trying to work on is centralizing all of this, centralizing production, centralizing procurement, centralizing the logistics, the sales function, just to get the synergies out of placing all of those FMCG products under one umbrella. The second phase of that will be regional expansion. We feel that there is great scope for the food business in the Horn of Africa. We feel there's great scope in North Africa. We feel there's great scope obviously in Oman. And so we are right now making sure that everything is seamlessly operating and then looking at expanding, mostly in export sales.
Okay, fantastic. Wish you all the best. I just wanted to highlight, if when it comes to divestment as an entity, we were more than okay to sort of collaborate with you as Vision Capital and help you with any of these divestments and sort of see if there's some work we can do together. Yeah.
I look forward to that. We had a very interesting meeting a while ago. I look forward to a new one soon.
Excellent. We'll take this offline. Thank you so much once again.
Thank you, gentlemen. Thank you. If nobody else has a question, do you mind if I conclude this meeting for today? Thank you everyone for joining us. As always, the recording of this will be available on the MSX website and on the company's website.
Tomorrow.
Hopefully before the end of the day tomorrow. Other than that, you know our numbers. You can reach out to us if you need us. Thank you very much. Have a good afternoon.